Based on the historical data and forecast, Bitcoin has shown volatility with a clear support level at $107,500. The RSI has been fluctuating between 34.8 and 47.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential rebound. Considering these factors, I recommend a long position strategy with an entry price of $107,500. A stop loss should be placed just below the support level at $106,500 to mitigate potential losses if the price breaks down. The initial target price should be set at the middle of the Bollinger Bands, which is around $116,200. To enhance the strategy, I suggest incorporating RSI signals. If the RSI falls below 30, it signals an oversold condition, providing an additional entry point. Conversely, if the RSI reaches 80, it suggests an overbought condition, prompting a potential exit or profit-taking. The forecast data indicates a price range between $107,500 and $109,600 over the next week. Therefore, a conservative approach would be to adjust the target price to $109,600. Combining these indicators, the final portfolio would involve entering long positions at $107,500, setting a stop loss at $106,500, and targeting $109,600, with RSI signals used for additional entry and exit points. Based on the historical data and forecast, Ethereum shows a downtrend with support around $3,800 and resistance at $4,680. The RSI consistently remains below 50, indicating a bearish momentum. Considering the forecast for the next week, the price is predicted to fluctuate between $37.60 and $39.30, suggesting continued sideways movement with a slight downward bias. Therefore, a short-term short strategy is recommended. The entry price will be $3,930. A stop loss should be placed above the resistance level at $4,080 to limit potential losses if the price unexpectedly reverses. The target price for this short position will be $3,760, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. However, given the overall bearish trend and RSI readings, a short position remains favorable. We'll maintain the initial short position with an entry price of $3,930, a stop loss at $4,080, and a target price of $3,760. This combined approach leverages both momentum indicators, RSI, and volatility indicators, Bollinger Bands, for a more robust and adaptive investment decision. This portfolio balances risk and reward, aligning with a high returns investment approach. Based on the historical data and forecast, BNB shows a volatile trend with periods of consolidation and minor upward movement. The RSI fluctuates around the mid-level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering the support price at $1,060 and the resistance at $1,290, I propose a strategy combining RSI and Bollinger Bands to capitalize on short-term movements. My strategy is to enter a long position when the price touches the lower Bollinger Band and the RSI is below 50, indicating a potential oversold condition. For example, when the price reaches $1,090 and the RSI is below 50, enter a long position at $1,090. Set a stop-loss order slightly below the lower Bollinger Band at $1,070 to protect against unexpected downside moves. Aim for a target price near the upper Bollinger Band, around $1,130. If the RSI reaches 80 or the price hits the resistance level of $1,290, consider taking profits or adjusting the target price. This combined approach leverages the volatility suggested by the Bollinger Bands and the oversold/overbought signals from the RSI to maximize potential returns while minimizing risk. Based on the historical data and forecast, XRP shows a slight downward trend with support at $2.37. The RSI consistently fluctuates below 50, indicating periods of oversold conditions. The forecast prices are also slightly down, ranging from $2.31 to $2.37. Considering this, I recommend a contrarian strategy focusing on short-term bounces. We will implement an RSI-based strategy with an entry price of $2.27 when the RSI dips below 30, placing a stop loss at $2.20 to protect against further downside. The target price will be $2.40, aiming to capture a quick rebound. This strategy leverages the oversold conditions to capitalize on potential short-term price corrections. To enhance this, we'll incorporate the Bollinger Bands for confirmation. If the price touches the lower band around $2.27 and the RSI is below 30, it strengthens our entry signal. If the price rebounds and approaches the middle band around $2.35, we'll consider taking partial profits. If the price reaches $2.40, we'll exit the entire position. This combined strategy, blending RSI and Bollinger Bands, offers a disciplined approach to short-term trading, maximizing potential returns while managing risk with clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, Solana shows a downtrend with support at $180. The RSI consistently hovers below 50, indicating a bearish momentum. The forecast for the next week predicts a price range between $179 and $188, further supporting a cautious approach. We will implement a contrarian strategy capitalizing on potential rebounds. The first strategy is to buy when the RSI reaches an oversold level below 20, setting a stop loss at the support level of $180. The initial target price will be $186, aligning with the recent resistance levels. To refine the strategy, we'll incorporate Bollinger Bands. When the price touches the lower band of $179 on October 25, 2025, we will enter a long position. A stop loss will be placed just below the lower band at $178, and the target price will be set at the middle band of $185. Combining the RSI and Bollinger Bands, we will buy at $180 plus $1, setting a stop loss at $179 plus $1. And targeting $186 plus $1. This combined strategy balances risk and reward, leveraging both momentum and volatility indicators to maximize potential returns. Based on the historical data and forecast, Dogecoin demonstrates a slightly downward trend with support consistently at $0.19. The RSI consistently stays above the oversold level of 20, ranging from 31.6 to 42.9, suggesting that the asset is not severely undervalued. The Bollinger Bands show that the price has been fluctuating within a range, and the forecast indicates a potential further decline towards $0.176. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces near the support level. The strategy involves entering a long position at $0.186, coinciding with the forecast price on October 29, 2025. A stop loss should be placed at $0.19, just above the established support level, to limit potential losses. The initial target price is set at $0.198, capitalizing on a potential bounce from the support. If the price reaches $0.198, consider moving the stop loss to break even to protect profits. If the price continues to decline, a second entry at $0.176 with a stop loss at $0.18 and a target price of $0.191 can be considered to capture potential gains from the downward trend. This combined strategy balances the risk of a downward trend with the opportunity for short-term gains. Based on the historical data and forecast, TRON shows a weakening trend. The price has been fluctuating within a narrow range, with the forecast indicating a further decline. The support price is consistently at $0.287, while the resistance is at $0.309. The RSI consistently remains below 50, indicating a bearish momentum. Considering the forecast, I recommend a short selling strategy. We will enter a short position at $0.313. The stop loss will be set at $0.325, just above the upper Bollinger Band to avoid being triggered by short-term price fluctuations. The initial target price is $0.30, aligning with the forecast and a conservative approach. To further refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI falls below 20, indicating an oversold condition, we will tighten our stop loss to $0.318. If the price touches the lower Bollinger Band, we will consider reducing our position size to 50%. If the price reaches the initial target of $0.30, we will reevaluate the situation. If the price shows signs of reversing, we will take partial profits and move the stop loss to break even. If the downward trend continues, we will set a second target price at $0.287, the support level. This multi-layered approach maximizes potential returns while minimizing risk. Based on the historical data and forecast, Cardano demonstrates a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment, with readings frequently approaching oversold conditions around 20 to 35. The Bollinger Bands show that the price has been fluctuating within a relatively narrow range, suggesting potential for a breakout. The forecast for the next week indicates a further decline, with prices potentially reaching $0.59. Therefore, I recommend a short selling strategy targeting a decline in price. The entry price for this short position should be $0.634. Given the support level at $0.624, set a stop loss at $0.656 to limit potential losses if the price unexpectedly rebounds. The initial target price is $0.59, aligning with the forecast. If the price reaches this target, consider taking partial profits and adjusting the stop loss to break even. A secondary target price is $0.551, based on the lower Bollinger Band from the historical data. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH demonstrates a downtrend with recent price fluctuations. The RSI consistently hovers around the oversold level, indicating potential buying opportunities. The Bollinger Bands show that the price is currently near the lower band, further supporting a potential rebound. Therefore, I recommend a contrarian strategy focusing on short-term gains. We will implement a buying strategy when the RSI crosses above 33.2, with an initial entry price of $4,080. A stop loss should be set at $4,080 to limit potential losses, and the target price is $4,250, aiming to capitalize on a short-term bounce. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it strengthens the buy signal. We'll also add a secondary target price of $4,280, based on the recent resistance level. This combined RSI and Bollinger Bands approach offers a balanced risk-reward profile. The final portfolio will be 60% based on the RSI strategy and 40% based on the Bollinger Bands strategy, allowing for flexibility and potential profit maximization. Based on the historical data and forecast, Chainlink shows a downtrend. The RSI consistently hovers below 50, indicating prevailing selling pressure. The forecast for the next week predicts further decline, with prices ranging from $16.2 to $15.4. The support price remains at $17.2, while the resistance is at $22. Considering these factors, I recommend a short position strategy. We will enter a short position at $17.2, coinciding with the support level and a relatively low RSI of 37.3. The stop loss will be set at $18.7, just below the recent resistance to limit potential losses. The initial target price is $16.2, aligning with the first forecast price. To refine this strategy, we will incorporate Bollinger Bands. When the price touches the bottom band, it indicates a potential bounce. However, given the overall downtrend and bearish forecast, we will maintain the short position. If the price rebounds to $17.2, we will move the stop loss to $17.2 to protect profits. If the price continues to fall and reaches $16.2, we will take partial profits and adjust the target price to $15.4, the lowest forecast price. This combined strategy balances the bearish momentum with potential short-term rebounds, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Synthetix shows a volatile trend with periods of consolidation and upward movement. The RSI readings indicate that the asset has been fluctuating between oversold and overbought conditions. Considering the support price of $1.25 and the recent forecast prices, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. We will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the support level of $1.25. The entry price will be $1.25. The stop loss will be set just below the support level at $1.23 to protect against further downside risk. The initial target price will be the nearest resistance level of $1.62, offering a potential gain of 37 cents. To refine this strategy, we'll incorporate the Bollinger Bands. If the price approaches the lower band while the RSI is oversold, it strengthens the buy signal. Upon reaching the $1.62 resistance, we'll reassess. If the price breaks through the upper Bollinger Band and the RSI is approaching 80, we will move the target price to $2.08. If the price retraces back to the center of the Bollinger Bands, we will move the stop loss to the center of the Bollinger Bands to lock in profits. This combined approach balances risk and reward, capitalizing on volatility while providing robust risk management. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with significant volatility. The RSI consistently remains below 50, indicating a bearish sentiment, with values frequently dipping into oversold territory below 30. The Bollinger Bands show that the price has been trading within the lower bands recently, suggesting a potential for a rebound. Combining these indicators, I propose a contrarian strategy targeting a potential bounce. We will enter a long position at $464, coinciding with the first day of the forecast and the current low. A stop loss will be placed at $458, just below the lower Bollinger Band to mitigate potential losses if the downtrend continues. The initial target price will be $481, aligning with the forecast for the second day. To refine the strategy, we'll implement a dynamic trailing stop loss. If the price reaches $481, we'll move the stop loss to $475, securing some profit. If the price continues to rise, we'll adjust the stop loss further to $470 when it reaches $485. The final target price will be $490. This approach balances the potential for high returns with risk management, capitalizing on a potential rebound while protecting against further downside. This portfolio combines the RSI oversold signal with the Bollinger Band's potential for a bounce, providing a well-rounded investment approach. Based on the historical data and forecast, XRP shows a slight downward trend with support at $2.37. The RSI consistently fluctuates below 50, indicating periods of oversold conditions. The forecast prices are also slightly down, ranging from $2.31 to $2.37. Considering this, I recommend a contrarian strategy focusing on short-term bounces. We will implement an RSI-based strategy with an entry price of $2.27 when the RSI dips below 30, placing a stop loss at $2.20 to protect against further downside. The target price will be $2.40, aiming to capture a quick rebound. This strategy leverages the oversold conditions to capitalize on potential short-term price corrections. To enhance this, we'll incorporate the Bollinger Bands for confirmation. If the price touches the lower band around $2.27 and the RSI is below 30, it strengthens our entry signal. If the price rebounds and approaches the middle band around $2.35, we'll consider taking partial profits. If the price reaches $2.40, we'll exit the entire position. This combined strategy, blending RSI and Bollinger Bands, offers a disciplined approach to short-term trading, maximizing potential returns while managing risk with clearly defined entry, stop loss, and target prices. Based on the historical data and forecast, Ether.fi shows a downtrend. The RSI consistently remains below 50, indicating bearish momentum. The forecast for the next week predicts a continued decline, with prices dropping to $0.775. Considering the support price of $0.961 and the decreasing Bollinger Bands, I recommend a short position strategy. The entry price will be $0.861. The stop loss will be set at $0.915, just above the recent high of the Bollinger Bands. The initial target price is $0.775, aligning with the forecast. To maximize returns, we will implement a dynamic strategy. If the price reaches the target of $0.775, we will move the stop loss to the entry price of $0.861, securing profits while allowing for potential further gains. If the price retraces to $0.915, we will close the position, locking in profits. This approach combines the RSI's bearish signal, the Bollinger Band's confirmation of a downtrend, and the forecast's price decline to create a high-probability short-selling opportunity with clear risk management parameters. Based on the historical data and forecast, Artificial Superintelligence Alliance exhibits a clear downtrend. The RSI consistently remains below 20, indicating a deeply oversold condition. Furthermore, the forecast predicts a continued decline, with prices dropping to as low as $0.145. Given this strong bearish momentum, I recommend a short-selling strategy. Entry price should be $0.236, coinciding with the established support level. Place a stop-loss order at $0.264, just above the recent high. Set a target price at $0.145, aligning with the forecast low. To refine the strategy, we can incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the downtrend. We will use a combination of the three strategies to maximize returns. The primary strategy is shorting at $0.236 with a stop-loss at $0.264 and a target price of $0.145. This strategy will form the core of our portfolio, capitalizing on the strong downtrend and oversold conditions. This portfolio will generate high returns. Based on the historical data and forecast, Ethena shows a fluctuating trend with a recent upward bias. The RSI consistently remains below 50, indicating a generally oversold condition, with values frequently dipping below 30, signaling potential buying opportunities. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. The forecast for the next week projects a slight downward movement initially, followed by a stabilization around $0.42. Therefore, I recommend a long position strategy targeting a gradual increase in price, capitalizing on the oversold conditions and potential for a rebound. My proposed strategy involves entering a long position at $0.401. Given the current RSI and Bollinger Band positions, a stop loss should be placed at $0.39 to mitigate potential losses if the price continues to decline. The initial target price is set at $0.45, aligning with the middle of the Bollinger Bands and a reasonable profit margin. If the price reaches $0.45, we can consider moving the stop loss to break even, $0.401, to secure profits and potentially ride further upward momentum. A secondary target price of $0.5 can be considered if the price breaks through the resistance level of $0.45 and shows sustained upward momentum. This strategy combines RSI and Bollinger Band signals to maximize potential returns while managing risk effectively. Based on the historical data and forecast, ApeCoin shows a recent downtrend with periods of consolidation. The RSI consistently dips below 40, indicating a potential oversold condition. The forecast predicts a slight upward movement, but within a narrow range. Considering the support price of $0.387 and the recent oversold RSI readings, I recommend a long position strategy. We will enter a long position at $0.385. The stop loss should be set just below the support level at $0.375 to protect against further downside risk. The initial target price will be $0.438, aligning with the forecast high and a reasonable profit margin. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, reinforcing the oversold signal. If the price breaks above the middle band of $0.429, it could signal a potential trend reversal. In this case, we could consider adjusting the target price to $0.481. However, if the price fails to break above the middle band and shows signs of rejection, we will exit the position at $0.438. This combined RSI and Bollinger Bands approach provides a robust framework for managing risk and maximizing potential returns. Based on the historical data and forecast, Zcash shows a volatile trend with recent upward momentum. The RSI consistently above 60 indicates a strengthening uptrend, reaching an overbought level of 85.8 on October 11, 2025. The Bollinger Bands have widened, suggesting increased volatility and potential for price swings. The forecast for the next week projects prices hovering around $270 to $285, reinforcing the bullish outlook. Therefore, I recommend a long position strategy. Entry price will be $270, with a stop loss set at $265 to mitigate potential downside risk. The initial target price is $290, aiming to capitalize on the anticipated upward movement. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI dips below 60, which happened on October 24, 2025, with a reading of 61.9, consider entering a long position at $238. Place a stop loss at $233 and target $250. If the price touches the lower Bollinger Band, which occurred on October 24, 2025, at $141, it signals a potential buying opportunity. Enter a long position at $243, set a stop loss at $238, and target $260. Combining these signals, the most efficient portfolio would be a long position with an entry price of $270, a stop loss of $265, and a target price of $290, adjusted based on RSI and Bollinger Band signals. Based on the historical data and forecast, Jupiter exhibits a downtrend with periods of consolidation. The RSI consistently remains below 50, indicating a prevailing bearish sentiment. The forecast for the next week shows a fluctuating price range, but generally within a downward direction. Considering the support price of $0.343 and the RSI nearing oversold territory, I recommend a long position strategy with a focus on short-term gains. The entry price should be set at $0.352 on October 25, 2025, when the price begins to slightly rebound. A stop-loss order should be placed at $0.335 to limit potential losses if the price continues its downward trend. The target price for this trade should be $0.361, aligning with the forecast price and the resistance level of $0.428. The Bollinger Bands also suggest a potential upward movement as the price approaches the lower band. This strategy combines technical indicators and forecast data to maximize profit potential while minimizing risk. If the price reaches the target price of $0.361, consider taking profits and re-evaluating the market conditions for a potential reversal strategy. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, Virtual's protocol shows a mixed trend. The price has fluctuated significantly, with a recent surge to $0.984 followed by a slight pullback. The RSI consistently remains below 55, indicating that the asset is not yet overbought. However, the recent upward movement suggests a potential bullish momentum. Considering the support price of $0.736 and the resistance at $1.08, and the forecast prices which are mostly above $0.738, I recommend a long position with a focus on capitalizing on potential upward movements. My strategy is to enter a long position at $0.738. The stop loss should be set slightly below the support level at $0.71 to protect against potential downside risks. The initial target price will be $0.827, aligning with the forecast price for October 27, 2025. If the price breaks above $0.827, I will adjust the target price to $0.867, based on the historical center of the Bollinger Bands. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk.